Time for a look at the latest business news, and Donald Trump appears to have responded to a rather an olive branch offered by China in their trade talks. As you can see, our business editor Stephen Carroll has got all the details for us. Stephen.
Stuart, President Trump says that he will delay a planned increase to tariffs on Chinese imports by 2 weeks. This as the two sides gear up for fresh talks on resolving the trade war. Mr. Trump tweeted that he was taking this step after a request from the Chinese Vice Premier Liu He. The increase in tariffs from 25% to 30% on $250 billion worth of Chinese goods, due to come into effect on October 1st, will now be delayed until October 15th, as per Donald Trump's tweet. This news coming after China on Wednesday announced that it would exclude 16 categories of American goods from its import tariffs. Beijing and Washington due to restart talks on these issues later this month. Now, one of the products that China has hit with tariffs was soy coming from the US. That means the country's been looking for new suppliers, and it's found one in Argentina. Erin Ogunke reports.
A long-awaited deal linking the world's largest exporter of soy meal with the world's top consumer. Beijing and Buenos Aires have reached a deal paving the way for China to import soy meal from Argentina. China has long resisted importing the processed soybeans to promote its own crushing industry. Wednesday's agreement marks an end to decades of negotiations.
We know this is a historical achievement that we've worked hard for. For over 20 years, we've wanted to open up this market.
The development comes at a critical moment for Argentina, still in the throes of a deepening economic crisis. Earlier this month, the government implemented currency controls over fears of capital flight, sending many to the banks to withdraw cash. Argentine President Mauricio Macri says the landmark agreement will bolster jobs in the country's agricultural sector and spur more opportunities for farmers. Argentine crushing plants are forecast to ship 2.3 tons of soy meal to China in 2020, which amounts to around 8% of its production. But one man's gain is another man's loss. Beijing has sought new suppliers of soybeans amid the trade war with the United States, which was China's second largest supplier. In July last year, Beijing imposed tariffs of 25% on a list of American products, including soybeans, curbing shipments of the crop from the U.S.
We know the markets are very sensitive to trade news, so there is some optimism around from investors in Europe today after that news of delaying those tariffs from Donald Trump. The big focus in Europe later will be the European Central Bank meeting, though. You can see London, Paris and Frankfurt all trading up ahead of that. Investors wondering, will Mario Draghi use one of his last meetings in charge of the ECB to stimulate the Eurozone economy? On the Asian markets, that news on trade was enough to give a boost to most shares. The Hong Kong Hang Seng, though, still dipping into the red. One of the shares that's down in Hong Kong is the Hong Kong Exchanges Company. Their shares down over 3% after their offer to buy the London Stock Exchange. Now, the pharmaceutical giant Purdue Pharma has agreed a tentative settlement with thousands of local governments in the United States over its role in the opioid addiction epidemic. Purdue makes the painkiller OxyContin and is being sued over its aggressive marketing of the drug and its contribution to the crisis. The agreement would allow Purdue to file for a form of bankruptcy and to pay $12 billion over time to those local governments. $3 billion of that will come from the company's owners, the Sackler family, who would exit the firm as part of the deal. This agreement covers 23 states and 3 US territories, with legal action for many more still pending. Now, Uber says it will fight a new law in California which could force it to reclassify its drivers as employees rather than independent contractors. The bill was passed by state lawmakers on Wednesday. Under the legislation, if gig economy workers pass a test which deems them to be employees, they'll be entitled to minimum wage and other benefits. Uber's head of legal telling journalists that along with its rival Lyft, they'd already paid $60 million to lobby for a public vote on this law. Tony West saying that Uber will continue to respond to claims of misclassification as an employee or not in arbitration and in court, as they do now, but that they will continue to advocate for the independence and choice that drivers tell the company they value most. Well, finally from me, there may have been a muted response from the tech world to Apple's iPhone 11, but it was enough to impress investors. Apple shares rose by 3% on Wednesday, pushing it past the milestone of a $1 trillion market valuation. It had lost that crown back in November over fears about its future earnings from, among other things, the iPhone. Apple was the first company to surpass that 1 trillion mark on the markets. Currently, Amazon is the only other firm to hold the title. Stuart.
Thank you very much, Stephen. Still don't get that 3-camera business. I'm such a dinosaur. Anyway, thank you very much, Stephen. Business.